Hi there, welcome back. You're watching Market Fatafat on ET now. We have with us on board Sameet Chavan, Head Research Technical and Derivative of Angel One, joining us on the technicals. And once again, we have Ansh on board joining us from our research team. Thank you so much, Sameet, for taking the time out and joining us. You've picked out Coforge on the charts for us. Tell us which direction are you seeing the stock heading in, and how does the stock look like to you on the charts?
Clearly, in the recent past, stock has already gained quite a lot from the lower levels of 4200, 4300. It has been maintaining its sturdy structure. But since last 3-4 days, we have witnessed some price corrections now. And today, the way the stock tanked below its important support of 20-day exponential moving average, it appears that the stock is heading for further correction from here on. The next important level to watch out for would be around 6400. Where the important moving average such as 89 exponential moving average coincides, and then 6000 is a major level to watch out for. So as of now, the trend, at least with the short term view, looks slightly weak. Any bounce back would be a good exit opportunity. On the higher side, 7100, 7300 would act as a very strong list.
Okay, well, let's keep going with all the stocks. I've picked up JM Financial today to share with our viewers. Now, this stock, in fact, in the morning was up as much as 6.4% to reach its 52-week high following the RBI's decision to lift restrictions on its subsidiary JM Financial Products Limited. The RBI, in a letter dated 18th October, announced that the immediate removal of restrictions on JM Financial Products Limited regarding financing against shares and debentures. The move marks a significant relief for the financial service provider, allowing the subsidiary to resume these activities after the months of regulatory curbs. The RBI had initially imposed these restrictions all the way back in March of this year, prohibiting the subsidiary from offering any form of financing against shares and debentures, including loans against IPOs as well as non-convertible debentures. JM Financial's management has welcomed this decision, seeing it as an opportunity to restore its financial product offerings and meet the market demand more effectively. Surprisingly, right now it has fizzled out all of those gains, and it's in fact deep in the negative 3.5% lower is where JM Financial is right now.
Alright, that's JM Financial's deep in the red, but so is Kotak Mahindra Bank. That's really pulling the index down. In fact, the stock fell 5% after it reported that a weak set of numbers for Q2. The names have moderated 11 basis points sequentially to 4.9%, and the card delinquencies has driven an increase in the slippage run rate as well. Now, a couple of other things, NII and PPOP largely are in line. PAT and NIMs were below the estimates. PAT came in at 3,191 crores, which is a downtick of 5% on a sequential basis, but an uptick of 5% on a year-on-year basis. We did see, Street giving a thumbs down on that because it was below the expectations. Also, if you look at the comments, the pressure from the interest expenses led to the NII growth of 2% on a sequential basis. The PPOP declined by 2% on a sequential basis. Also, the provisions, if you look at the provisions, they were up 8% on a sequential basis, but did not meet the expectations. PAT declined by 5% on a sequential basis versus the expectations of a 2% decline. Investec has come out with a note on Kotak Mahindra Bank, and they're maintaining a buy but cut the target price to 2,185 rupees. Emkay Global has reduced it with the target price of 1,700 rupees. And also remember, they have also announced that to acquire the personal loans portfolio of Standard Chartered India for approximately 4,100 crore rupees, which will add 1% to the loan book. And analysts believe that this will be an ROE and NIM accretive and will also boost the loan book growth going ahead.
On that note, let's quickly address the flashes that we're seeing on the bottom of the screen. You have Nifty 50 company Ultratech Cement coming out with its numbers. Net revenue has come in at 15,634.7 crores compared to 16,012 crores, which is a downtick of 2.5%, but largely in line with what we at ET now were expecting. EBITDA, however, has come in at 2,018 crores compared to 2,551 crores, which is a downtick of 21%. We were expecting the EBITDA to come in at 2,218. So looking like a slight bit of a miss on that front. Net profit has come in at just 820 crores compared to 1,281 crores, which is down 36% on a year-on-year basis as well. At 18, we were expecting the PAT to come in at 956 crores, so that's also a miss on that front. And margins lastly have come in at 12.9% compared to 15.9% on a year-on-year basis. We were expecting the margin to come in at 15%, so it's a miss on that front as well. But well, this is the first cut of Ultratech's numbers, and we'll keep you posted as we have more on this.
All right, moving on then, coming to you, Sameet, L&T Finance is what you have picked out for us. Let's look at the charts then. In the last 6 months, it's been in a consolidation mode. In fact, the last 1 month, it's gone down, like it's trading with cuts of almost 14-odd%. Tell us, is this time for a reversal now?
See, it seems that this is, one of the weakest counter within the NBFC space. In last 4 5 months, the stock has done nothing. It has been moving in a broad range of 190 on the higher side and 160 on the lower side. It is now challenging its lower end, which is around 160. Stock has already slept below that important mark as well. So going ahead, once the stock reaches 158 on a closing basis, we could see this stock extending this correction towards its next sacrosanct support of 145. So overall, the immediate trend looks weak. The kind of price activity that we have been witnessing since morning, it appears that the stock is on the verge of a breakdown from its inverted pennant kind of pattern. So on the higher side, any bounce back is likely to get sold into 165, 172 would act as a very strong resistance.
Sameet, so that's the view coming in on L&T Finance, but let's move away from the markets and talk about a hot topic right now. And after innumerable hoax bomb threat calls in the past few weeks, the Union Civil Aviation Minister has said that those caught for making such calls to airlines will be put on a no-fly list. He also said that the centre is also trying to make amendments to the Suppression of Unlawful Acts Against Safety of Civil Aviation Act. My colleague Sameer is joining us with more details. Sameer, tell us a little bit more about all the developments that you're seeing over here.
In the last 7 days, more than 100 airlines, whether it be Indigo, Air India or SpiceJet or Akasa Air, they have received many bomb threats and specifically the hoax calls which has disrupted the flight operations, created a lot of discomfort to the passengers, and that has actually alarmed the government. And now, deeply concerned with such bomb threat or the security alert, now government plans to amend two specific rules. The one is aviation security rule, and the second rule that the government plans to amend is the Suppression of Unlawful Acts Against Safety of Civil Aviation Act 1982. So these are two rules which the government is now planning to amend, and this amendment will lead to that those who are responsible for sending such hoax security alert, they will be put under no-fly list. And in the same direction, the discussion with the key stakeholders, whether it be airline, BCAS, which is the security agency, DGCA, the aviation regulator, and several other stakeholders, the discussion has already been initiated, and largely government understand that now they have to bring in some sort of legislation amendment that will put these responsible person some stringent action has to be taken. So putting these person under the no-fly list is first option that the government is actively considering, and for the same, the amendment has to be done, and government is targeting to bring this amended law or the rule in the upcoming parliament session. So that's largely what government is currently looking at. But if you see the larger picture, each passing day, more than 10 or 15 such security alerts are being received by various airlines, and this has created not just a discomfort, not just the disruption in flight, but also a great revenue loss to the airlines as well. An undisclosed amount that has been shared to our sources, that more than 200 crore revenue loss that has been suffered by airlines so far. This number is continuously increasing, and that also indicate to the fact that this entire problem is so big that now government is looking to bring legislation amendment so as to put at least some check on this this entire exercise. Secondly, we are also getting to know from our sources that since the festive season is on and these sort of illegal or unlawful activity is taking place, so the government as a precautionary measure has increased the security check at various airports by like 10 to 20%. These security checks has been increased by the security agency.
All right, thank you so much for joining us. But let's go across to the aviation minister and see what he had to say about the issue.
Aircraft security rules is something which deals with the security aspect when it comes to within the aircraft. How do we deal with the security issues, concerns, and there is a strict rules that have been laid out. And we have seen that if you can do a little amendment there, it can specifically strengthen the cause which we are fighting for right now. So one of the idea that we want to propagate by changing these rules is, once we catch hold of the perpetrator who is behind this, we want to put them in the no-fly list. And with that idea or with that thought process, we are trying to amend the aircraft security rules, which is already there. We feel that there is some betterment that we can do, and with our discussions, we are trying to amend it.
Okay, that's the word coming in from the Aviation Minister. But on that note, we'll slip into a very short break. We'll keep it going with more stocks on the fundamentals and technicals just on the other side of this short break. So you stay tuned.
Welcome back. You're tuned in to Market Fatafat, where we are taking you through all the stocks that are in focus today. Stock that is focused in right now is Ultratech Cement, that's just come out with its quarter 2 numbers. In fact, let's go across to my colleague Ashesha, who's joining us with all the number crunching. Ashesha, we were expecting a weak set of numbers coming in from Ultratech. Tell us, what does the report card look like?
Revenues are slightly higher than what we were working with at about 15,600 odd crores, but as far as margins are concerned, it has come in as a miss, 12.9% versus expectations of 15%. So it's clearly a miss as far as margins are concerned. Remember, realizations have declined by about 8 odd percent on a year-on-year basis and 2.5% on a sequential basis, in line with the fall in cement prices that we have seen over the last 1 odd year. So realizations clearly have fallen, but higher costs have also impacted EBITDA per ton. We were working with a figure of 800 rupees per ton as far as spreads are concerned, and it has come in at 725 rupees per ton. So it's clearly a miss as far as spreads and margins and EBITDA per ton is concerned, but their outlook continues to remain very strong. They believe that they will continue to report volume growth of about 7 to 8% over the next few years. They continue to focus on their expansion plan, so they are eyeing 200 million ton capacity by FY28. So the long-term plan continues to remain impact, but as far as this quarter is concerned, lower realizations and higher costs have impacted performance, and it's a big miss as far as EBITDA per ton and as far as margins are concerned. Big miss coming in on EBITDA per ton and margins. Achesha, thank you so much for taking us through that. Let's just pull up the chart of Ultratech Cement and take a look at what the stock is doing. And the stock seems to be sharply in the red, 1.7% lower is what the stock is, and further weighing in on Nifty's fall today. So that's not going to bode well for the Nifty. At least the numbers are weaker than what the street was expecting for Ultratech Cement. But let's move on, talk about Garden Reach Shipbuilders. And this stock is in focus on the back of an order win. Now they've received a letter of intent from the Ministry of Defence for a significant contract. This contract, valued at around 491 crore rupees, involves the design, development, construction, integration of equipment, testing, certification and commissioning of an acoustic research ship within a timeline of 36 months. So significant order win coming in for Garden Reach, 491 crore rupees coming in from the Defence Ministry, and on the back of that the stock is up almost, in fact more than 2.5% as we speak.
All right, coming to you, Sameet, ACC is what you picked out for us. Another counter which is seeing long consolidation for the last 6 months. Tell us, is this about time for a breakout? Even in the last 1 month, we've seen the stock consolidating. Tell us, is there a breakout on the charts?
It would be too early to take that call whether the stock has broken out or not. It is just consolidating around its importance. Of course, the one thing is promising that this stock is finding support around its 2250, 2200 kind of mark since last few months, and on Friday also we saw a good pullback from those important levels. Today, despite the unfavorable market cues, the stock is showing some sort of resilience. So the next important level to watch out for would be around 2350. That would be a trend deciding level, at least in the short term. So once this stock surpasses 2350, we could see a good, decent bounce back, probably towards 2450, 2500. So as of now, there's a range of 2450.
Okay, on that note, that's the view coming in on ACC. And you've picked out UCO Bank and another bank, in fact, over the course of the weekend that's come out with its earnings. We've had a lot of those over the weekend. Tell us what the earnings fine print looks like.
Stock was actually up by around 6% in the morning, but now so it is holding on to that gains of almost 2% now. So yes, UCO Bank has reported its numbers and its interest income has gone up by 16% to 6,074 crore. Also, its NII has given a good jump of almost 20%. Now, if we talk about PAT, then that has gone up by over 50% from that 402 crore directly to over 600 crore. At the same time, PPOP has also seen an uptick of around 52%. Now, if we talk about NPAs, then both the JNPA and NNPA has also shown some improvement. GNPA has come down from 3.32% to 3.18%, whereas the NNPA has also improved by around 5 basis points. Also, if you see on chart, then stock has actually given a good breakout from its 9-session consolidation pattern and has surpassed above its 20 DMA level.
All right, that's UCO Bank. But moving on to another banking name, IndusInd Bank. Sameet, you have picked out. This one is down and out in today's trading session. Also, in fact, it is trading towards its 52-week low. Tell us reversal anytime on the charts. What are you seeing on the charts for this one?
This is one of the weakest counter within the banking, specifically private banking space. If you see, this stock has not participated at all in the recent rally that the entire banking space saw. In fact, today we are seeing a decisive breakdown happening from this counter. There was a important sector bank support around 1340. This stock has decisively broken that support and trading convincingly below that. It is now challenging 1300 mark as well. So going ahead, considering the overall price action, the stock is clearly poised for further correction. 1250 is the next level to watch out for. If this stock manages to hold 1250, then probably we could see some consolidation. But if this stock breaches that important support also, will not be surprised to see this stock even retesting 1200 kind of. So overall, this has been one of the weakest counter, and till the time it does not surpass 1380, 1400 on a closing basis, any bounce back is likely to get sold.
All right, moving on then, another counter that is in focus today is Oberoi Realty. In fact, two set of news flows coming in there. It is trading with gains of over 4% right now. Good set of results. If you look at the results, we're seeing a profit uptick of 29% on a year-on-year basis at 589 crore rupees. Revenue is also seeing an uptick of 8.4% on a year-on-year basis at 1,320 crores versus 1,217 crore. EBITDA is at 814 crores versus 638 crores, up 27.5% on a year-on-year basis, and the margins are also seeing an expansion of 923 basis points on a year-on-year basis. They've also launched, Oberoi Garden City in Thane on Friday and have recorded a gross booking value of 1,348 crore rupees for 5.65 lakh square feet carpet area over the first 3 days of its launch, and on the back of that, Oberoi Realty is up and away with gains of 4%.
Well, finally, something is doing well in today's market, and the next stock that we're going to be speaking about also is holding up pretty smartly for itself, and that is Raymond Lifestyle. This is on the back of a brokerage note coming in from Motilal Oswal. They've initiated a buy rating with a target price of 3,200 rupees per share, which is significantly higher than where the stock is currently trading at. They believe that it's a pure play lifestyle company from the house of Raymond. Multiple growth levers seem to be at play, and they're capitalizing on opportunities from Bangladesh +1 and the China +1 trends in the B2B garmenting segment right now. They say that the launch of new categories such as innerwear and sleepwear is increasing focus on casualization and premiumization of the portfolio, achieving sourcing efficiencies through scale, which could enhance operating leverage. Now, Raymond is also striving to enhance shareholder value through the fast-paced growth in the branded apparel space as well, and this is something that Motilal Oswal is actually liking. So, very bullish note coming in. Initiated a buy rating with a target price of 3,200. Stock up more than 2.3% as we speak.
All right, moving on then, coming to you, Ansh, another earnings candidate, NCX. Tell us, what does the report card look like?
So their revenue has jumped by over 73% from 165 crore to 286 crore. Now if we talk about profit, then they had actually incurred a loss last year of 19 crore, and that has turned into profit of around 153 crore. Talking about EBITDA, they had incurred a loss of around 28.7 crore. Now this time EBITDA is positive by 134.6 crore. Also they have shown good margin of around 47.1%. Also if you see on chart, then the stock is trading moderately in green, but it has also touched record high level, advancing for 5th consecutive month now.
Okay, well, that's the reason why MCX is in focus also on the back of its earnings. But let's pull up the next stock. And Sameet, you've actually picked out Mazagon Dock on the charts for us, and it's a defense counter. It's been doing pretty well, and in fact also the last 3 months, the last 6 months, in fact the stock has doubled. It's looking really good. But you believe that this momentum will sustain going ahead, or now is it time for this stock to slow down a little bit?
In fact, on Friday itself, this stock, showed some signs of strength. In fact, this stock, along with the recent rise in volumes, managed to surpass its important cluster of 4,400, 45,500. And as a disclosure, we've recommended this to our clients as well on Friday itself around 45, 45.15 kind of mark. So we expect this move to extend. 48.60 is the target that we are looking at. This stock is clearly showing some strength after spending a lot of time around 4,000, which coincides with the 89 exponential moving average as well. And the kind of price and volume activity that we have been witnessing since last couple of days, if you see the mid cap index is tumbling, but this stock is clearly bucking the trend. So overall, this stock is showing a good strength. We expect 4,800, 4,860 kind of levels in the near term.
All right, with that we come to an end of Market Fatafat. Thank you, Sameet. Thank you, Ansh, for taking the time out and joining us on the show. And Richard, of course, who joined us in the first segment. But with that, it's a wrap on this edition of Market Fatafat. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere, because Closing Trades is coming up next.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.